After months of a bitter trade war, is there truce between the US and China, the top two economies of the world? The trade war has crippled global economic growth, set off an environment of mistrust and fear, and has hurt the supply-demand cycles of many commodities in many markets beyond the shores of these two countries, China and the US. Now, there were murmurs early in the morning that the trade war will de-escalate soon. Washington was said to have agreed to remove some of the tariffs that it imposed on China. Now, Beijing has confirmed it. The deal itself is being dubbed as the phase 1 of a larger trade agreement. The timing is telling. US tariffs on Chinese imports are due on Sunday, the same day on which China's retaliatory tariffs are also supposed to come into effect. And markets across the world latched onto this optimism. Markets needed a day like this. The Shanghai Composite Index in China, Nikkei in Japan, Hong Kong's Hang Seng, India's benchmark indices, the Nifty 50, as well as the Sensex, South Korea's Kospi, all cheered in hope. In fact, this sparked a rally in markets across the world. London's FTSE, the French CAC, the German DAX, and all the indices on Wall Street, all the markets posted gains today. But then Trump spoke. By 7:30 in the evening, he said that the Wall Street report, which spoke about the trade deal, is wrong. Fake news, he said. Nobody knows if Trump is trying to force China to attempt this deal with his tweet. What is he trying to do by saying this now? Here it must be understood that markets are not always the best reflection of reality, especially with two enigmatic presidents in charge of the US and China. So what is the purported deal and how realistic is this deal? This is not formal, but reports indicate a broad structure to this phase 1 of the trade deal. 1, the US will suspend some of the next wave of tariffs on China, and 2, for that to happen, China has to buy more farm goods from America. China has already committed to buying agricultural products worth $40 billion from the US, but Trump wants them to spend $50 billion. There is no clarity on the nature of these farm goods. Is China happy? Beijing's response is a story of two parts. China's foreign ministry says that the trade agreement must be mutually beneficial, so Beijing is not giving away much.
China's position on China-US trade talks is consistent and clear. We have always been committed to resolving and controlling our differences through constructive dialogue. We maintain that consultations must be based on the principles of equality and mutual respect, and the agreement must be mutually beneficial.
Interestingly, China also asked the world to recognize the evil intention and adverse effects due to actions taken by the US.
We think the international community should sharpen their eyes, recognize the evil intention and adverse effects behind a series withdrawal and breach of contracts by the US.
The messaging from China has not been very clear. There is also no clarity on whether the tariff wars due on Sunday are over. But expect this story to evolve between now and Monday. Meanwhile, here in India, there have been a couple of promising developments on the economy front besides the rally in the markets. The government bond investment limits for foreign portfolio investors may be raised. This could bring more portfolio investors to India. India's trade deficit narrowed. Though the exports fell, the overall trade deficit narrowed, and that is good news. Add this to the trade deal optimism, there is a good reason for Indian markets to join the global rally. But if Trump has taught us something since 2016, it's this: wait till the trade deal is signed, lock, stock and barrel.